assumable VA loan. So any government-backed loan is assumable, technically. A VA loan, FHA, USDA, correct? So what that means is if the seller has an assumable loan and they have a really awesome rate, like 3%, what you can do is you can come in as the buyer, assume their loan, as long as you qualify, of course, and you take over their loan balance and you get that rate. So the tricky part is, and this is actually in this particular market getting better and better. The tricky part is you have to come up with the gap, which means if the house is now worth $400,000, they bought it for $300,000. If their loan balance is $290,000, you have to come up with the difference between $290,000 and $400,000. So that's where it was tricky and not really accessible to a lot of folks. But today, unfortunately, a lot of folks are either upside down in their payment. They bought a couple years ago in the height of the market. And so their loan balance is actually really, really close to market rate. And so that gap that you have to pay is very, very narrow. I mean, I have a client that I think they took over the balance and paid maybe $5,000. And now they're sitting in an awesome 2.75 rate. Again, as long as you qualify. And you don't have closing costs with that, right?
I don't think you have closing costs. It's the servicer that does.
Oh, right.
So here's the main thing with an assumable loan. If you are on the hunt for something like this, you obviously got to find the person that's willing to do it.
Sure.
Because they take about 3 months. I don't know how long yours was.
Sometimes it depends on the loan servicer. They're not all the same. Some are better than others. I have a list that are the headache ones, and I have a list of ones that are better.
You typically I tell people, most of the time when I'm talking about assumable loans, I'm talking to my agents that have listings, and I'm like, hey, just throw it out there. Throw it out there, market it as an assumable loan. The owner of the current home is the one that has to reach out to their servicer, and they have to start the process. You can't call them. Jackie can't call them.
Right.
The listing agent can't call them. It's they're only going to talk to the person that owns the home because it's his loan or their loan. The most important part is that you've got to get the ball rolling. You've also got to come up with a gap if there is one. 2, you've got to be willing to wait the time it could take to close because they don't move fast.
No, and that's probably why it's not it's not the right fit for everyone. But if you've got time and patience and you have that gap money, I think it's a great opportunity for people.
I've only heard of a few people doing them. I don't hear it very much. It should be utilized more, but I don't. And I just don't hear it a lot.
Sure. And 2 reasons why. Historically, that gap was way too wide, and folks simply couldn't afford it. Right? They don't have that cash on hand. These are veterans that are working with the zero down loans. So the gap was usually too wide for them to come up with out of pocket. The second thing is that
April,
the timing doesn't line up.
Doesn't close till June.
Sure.
And so there's those things with it. But I mean, it's if you can make it work, I mean, you can really get you a house that's affordable and that payment that you're comfortable with. But
Absolutely.
You have to get pre-approved with the servicer.
Yes.
A lender like me doesn't do anything on it.